Imagine waking up every day knowing that your money is hard at work, generating income while you sleep. It's not a dream. It's the power of investing in dividend stocks for passive income. Today, we're going to explore the world of dividend investing, uncovering the secrets to financial freedom. So, let's dive in. Welcome to this guide on how to invest in dividend stocks for passive income. In an era where financial security is a top priority, dividend investing stands out as a reliable way to build wealth over time while enjoying a stream of income. 1. Decoding dividends. At the heart of the stock market is the concept of a dividend. Imagine you've bought a piece, however small, of a company, making you a shareholder. As this company operates and earns profits, it's only fair that you get a share of those earnings, right? That's precisely what a dividend is. It's the company saying, "Thank you for trusting and investing in us. Here's your share of what we earned." Think of it like a pie, where the company's total profit is the whole pie, and each shareholder gets a slice proportional to their investment. Your dividend is your piece of that delicious monetary pie. 2. Why dividend stocks? Diving into the vast ocean of investment opportunities, one might wonder why specifically choose dividend stocks. The allure of dividend stocks lies in their dual benefit nature. Firstly, they offer consistent, recurring income, similar to receiving monthly rent from a property. Imagine the peace of mind that comes with a steady cash flow, irrespective of market fluctuations. Secondly, apart from this periodic payout, there's the added advantage of the stock's potential value growth over time. So, not only do you get regular rent from your stocks, but the property itself might increase in value. And the cherry on top? You enjoy these benefits without ever having to deal with the hassles of property management or demanding tenants. 3. Dividend yield, the magic number. Venturing into the world of dividend stocks. One phrase you'll frequently encounter is dividend yield. Think of it as a compass, guiding investors towards potential returns. Expressed as a percentage, it's the annual dividend payment divided by the stock's current price. For investors, a higher yield is like a siren song, promising more immediate income. But here's where caution becomes crucial. If the yield appears unusually high, it might not be a gold mine, but a warning signal. Such lofty yields can indicate underlying issues with the company or that the stock price has recently plummeted. Just like the strongest siren calls in myths led sailors to peril, a super high dividend yield might lead unsuspecting investors into rocky financial waters. 4. Picking the right stocks. Choosing the right dividend stock is akin to picking a dependable team player. Your best bets? Established companies, boasting steady earnings. Think of sectors that people turn to daily, regardless of economic tides. Utilities, we always need power and water. Real estate, people always need places to live or do business. And consumer staples, no matter what. We buy groceries, toiletries, and household items. These sectors, being essentials, often house companies that have stood the test of time and reliably reward their investors with consistent dividends. In essence, look for industries that remain resilient through economic ups and downs. 5. Dividend aristocrats and kings. Imagine the stock market as a royal court. Dividend aristocrats are the nobles, consistently raising dividends for over 25 years. And the kings? They've upheld this for a majestic 50 years. Such stocks are the crown jewels of a dividend portfolio, symbolizing reliability and long-term commitment. In the realm of investing, these royals can be foundational pillars, offering both stability and growth. 6. The power of reinvesting. Imagine your dividends as little seeds. Every time you receive one, instead of using it, you plant it back into the stock market garden. With time, these seeds grow into more stocks. As these stocks mature, They bear fruit in the form of even more dividends. Now, the more seeds you plant, the more abundant your garden becomes. This process, known as dividend reinvestment, works like nature's cycle, but in the financial world. Each reinvestment accelerates your growth, multiplying your wealth. It's like turning a small snowball rolling down a hill into a massive snow boulder, growing larger with every turn. 7. Risks and how to mitigate them. Think of investing like sailing on open waters. While you aim for smooth seas, storms can emerge unpredictably. Similarly, the stock market has its ups and downs, and dividends from companies can change based on their performance. To navigate safely, a sailor equips the boat with life jackets and other tools. In investing, diversifying your portfolio is like equipping your financial boat. By spreading investments across various sectors, you're less vulnerable to a single sector's downturn. And just as a sailor keeps an emergency raft, maintain a separate emergency fund. It acts as a cushion, ensuring you're prepared for financial surprises. 8. Tax implications. Taxes, though inevitable, can be intricate when it comes to dividends. Essentially, dividends fall into two categories: qualified and non-qualified, each with its own tax rate. Qualified dividends typically enjoy lower tax rates, whereas non-qualified ones might be taxed at your standard income rate. It's akin to navigating a maze. To ensure you're on the right path and optimizing your tax situation, it's wise to partner with a tax expert. Their guidance can help clarify the complexities and ensure you sail smoothly through tax season. 9. Starting your dividend journey. Embarking on your dividend investment journey is simpler than you might think, thanks to online brokers. These platforms have streamlined the process, enabling even beginners to get started with ease. Kick off by investing in a diversified selection of dividend stocks, which means spreading your money across various sectors to minimize risk. Think of it as planting a garden with a variety of seeds. As you nurture it, gain experience, and learn more, you'll find yourself tweaking your investments, much like a gardener adjusting plant placements. The key is to start small, keep educating yourself, and adapt based on your learnings and market movements. 10. Patience, your secret weapon. Investing in dividend stocks is akin to tending a garden. Just as you don't plant seeds and expect full-grown plants the next day, investments also take time to mature. Initial steps involve selecting the right stocks, akin to choosing the right seeds. Then, with consistent care and attention, avoiding impulsive decisions and allowing compounding to work its magic, your investments grow. Patience is key, as periodic dividend payouts, like blossoms, add value. Over time, with dedication and informed decisions, your financial portfolio, much like a well-tended garden, will flourish, showcasing the rewards of your persistence and discipline. A future where money works for you while you sip on a cocktail by the beach isn't just a dream. With the right dividend stocks, it's a future within reach. Found our dividend dive valuable? Hit that like button and subscribe for more financial insights. Because remember, with the right knowledge, every dollar can be put to work.